All right, welcome, everybody. Thank you for being here. We're going to be going over stock market success today with my great friend, Wallace Fisher. And so he's going to be about the stock market. I know some people use it for the retirement, some people use it for personal investing. We like to talk about options here. So the stock market itself sometimes I think can be pretty confusing, or people think that, it's just too high level, or it's, something above their head. But I think you can definitely begin to understand and learn to invest when you have someone who gives you guidance or someone who's explaining it to you. So we're going to wait for Wallace to join in here, and then I'm going to get, rolling, ask him some questions, just like, what are some good stocks right now? What is the difference between stocks and options? And if you have any questions, all you have to do is put them in the chat as we keep going along. I think it's important that people ask questions because, we're doing the best we can to give you the information. But if there's something that you want to be specific about, or something that we say that may be a little confusing, if you ask a question, it's so much easier for us to clarify for you and be able to kind of dive a little deeper into exactly what it is that you want to be able to understand. I'm inviting Wallace right now. So think about maybe like your stock portfolio, or maybe your retirement 401k, some of the things maybe you might have had in those different layers. Also kind of think about, like, I think there's AI coming right now. There's good solid companies that have been around for a long time. There's mutual funds, there are options, so the mix of different things that are in the stock market is what allows us to be able to dive a little deeper. And all right, so we have Wallace waving in right now. Let's see if we can make sure we can get him to join in. Sometimes Instagram can act a little funky. I know I was introduced to the stock market through my job when I was younger. I remember I started working at Whole Foods, and they had a stock market plan to go along with that, which was interesting. That was my first. So I think a lot of people initially get introduced to the stock market kind of maybe through some type of investment plan at work. Just waiting to get him to join in. There we go. Wallace, how you doing, sir?
What's up, brother? How you doing?
Man, thank you for being here. Thank you for taking some time. I know you do such a great job, just kind of breaking down the stock market, and I wanted you to be able to be here because I think it's important for people to have like that trusted expert. I think sometimes we see stock market commercials be Ameritrade, or all these things that are kind of very foreign. And I think being able to kind of sit here, ask questions in the chat, and have you kind of break down some of the things that people will perceive to be complicated that are a little bit more easier than they know. Thank you everyone for being here and tuning in. And if you're watching this later, even if you ask questions on YouTube or on one of our pages as you watch the replay, we check those questions and we reply to them. So, all right, Wallace, let me ask you, because what I like to do is I like to get the people who are watching something straight out the gate that they can use. So let me ask you this: what is the secret to success in the stock market?
Well, okay, Mark, thank you for having me. You hear me well?
Yes, sir. I can hear you very well.
Yeah, thank you for having me. It's been a pleasure. It's been a while, so let's continue to do stuff like this. My name is Wallace Fisher. I'm with Wall Street with Wallace. And as far as the answer to your question, what is the secret to success? I say it's for anyone that's looking to get into the stock market. Make sure you learn the fundamentals of the stock market, right? Because a lot of people don't understand when they're getting into a stock, or trying to find out what to invest in. They don't understand that the fundamentals are either good, bad, or kind of indifferent, right? So if we get into a stock, kind of like the foundation, right? You need to understand that the fundamentals, or the foundation, or we also say going underneath the hood. When you're looking at a car, you go to buy a car, most people that buy a car, open up the hood and try to see how good the engine works. That's the fundamentals of the stock, the engine, how good the engine is. So that's the secret to success. Find out what are the growth rates, how the business make money, and long term, as far as long-term success, do they have a history of doing well? Because some stocks don't have a history of doing well. And so we get into a stock that just do not do well and hadn't had a history of doing well. So I would say starting there is a good actual foundation of having success in the stock market.
Okay, I see what you're saying. So for some people, they don't know that a stock is actually tied to a business. It's a part of, a business's kind of financial strategy, which is to kind of, issue public shares or public pieces of its ownership into the public using the stock market. And then we can buy pieces of that company, and then that allows the business to kind of have, more money. And so our stock is then tied to how well the business does. It'll go up or it'll go down as good as the business does. So what you're describing, you're saying what a fundamental is, I don't just look at the company name like Tesla or, McDonald's or Walmart. I just say, well, I know them. That's why it's good. You're saying I need to kind of learn fundamentals of stocks and do research and data and kind of look under the hood behind the brand name and see how the company does, how the company builds its wealth, how the company serves its customers, and how long they've been doing that and how well they've been doing it. Is that kind of what you're saying?
That's exactly right. Tell you a quick story. Back in 2020, I believe, no, 2019, my sister, she shops at Walmart. She has two small kids, and she shops at Walmart in New Orleans. I think it's on Birmingham Highway. Anyway, she was like, hey, every time I go into Walmart, it is always super packed up in there. I think I should buy Walmart stock. I said, you know what? Do me a favor. Get with me so I can, show you if it's a good investment. And the funny thing is, I asked about the competitors. Who are Walmart's competitors? We looked at Target, we looked at Costco. So we compared the businesses, to see how good the stock is growing, how good the companies are growing, how good the business is, right? Even though you see Walmart packed every day, it may not be the best investment. So we went with Target and Costco. And guess what? I think at the time, Walmart was at $138. Right now, Walmart's at about $140 right now. Costco, is outperforming 5-6 times more, right? So sometimes you have to understand that the business is good or not so good. And so when you understand that, that makes things a whole lot easier. So instead of investing in Walmart, she invested in Target and Costco. And guess what? She doubled her money in more than 2 years.
There you go, looking under the hood. So yes, that's like you say, is the secret is not picking just that one that's going to up, or really, I guess you're saying the secret is not to think you're just going to come in one and done and hit all this big, huge money like you're playing the lottery. It's more of a come in, understand what you're doing so you can keep doing it well and actually be able to build wealth over time with the fundamentals. And I think that also removes the fear and the uncertainty, right? The market is always going to be uncertain by nature because thousands and millions of businesses are doing millions of things separately at times when a bunch of factors are factoring in. But you being able to analyze their response to those factors via the fundamentals gives you certain level of certainty to be able to make the moves you need to make when you're looking at the market, correct?
Exactly.
All right, so let me ask you this. So how did you get so good at stocks?
Whoa. So let me say, all right, so let me start here. All right, so when I was working at the Home Depot a long time ago, right? I'll tell you a quick story, and I'm good at stories. A long time ago, Depot at the time gave, and they still do, gave employees a 15% off if you signed up. Excuse me, if you signed up as far as employee stock purchase plan. So I was going to my car one day. Actually, it was my very first day, and this guy pulled up to me in a white van. It's kind of crazy, right? Guy pulled up to me in a white van and said, "Hey, you just started?" I said, "Yeah." He said, "Well, it's a good company, and if I had anything to do that I didn't do before, I would buy Depot stock early." I said, "Okay," And so his name was John Packer. What I'm saying, his name is John Packer. I'm not sure. I don't want to put that on him as it was. So he taught me a valuable lesson because he telling me to get into Depot stock because we get a 15% discount just for signing up, right? So that means I make at least a 15% profit. So as the years were going on, remember he told me to invest in some companies, and I did like a Kmart and some other companies before they went out of business. I said, man, this man is really giving me some good advice. And I thank him for that, because he made me start telling people to get into the depot stock program, because again, it's a 15% discount. So I leave there, go to Lowe's, they have the same thing. Katrina happens, and I'm looking at my Lowe's and depot stock, and a good friend of mine, I actually went to high school with him. His name is Eric Thompson, and actually he does my insurance and stuff like that. So he came in to do my insurance, and he saw me on the E-Trade site looking at my stocks. He said, "What do you know about that?" I said, "Well, I get a 15% discount, so that's why I do it." And he put me on this company called InvestTools, and from there I began to teach myself on the stock market, right? So all he had to do is open the door, right? So, and teach myself, some self-taught things. And then I came up into some guys on Wall Street that gave seminars. So I went to New York, I went to Chicago to go to some seminars on how to, learn the stock market, how to get into the stock market. And then from there, like I said, I wanted to learn more and more, right? So I started teaching myself and spending time in the market and trying to find out what good stocks are. I'm already in Depot. I'm already in Lowe's. Those are, two amazing companies at the time. And they still are. And I'm starting to find other companies. Guess what? Amazon came about. Netflix started coming about. And the big dog, Apple, right? So I'm starting noticing these companies coming through. And I'm like, all right, let me start investing in these companies on what I've learned from those seminars and those webinars. And that's how I got into it. John Packard was the first person that ever told me to start buying stock. And again, that came through the employee discount thing with Home Depot at the time.
I think I heard like 4 really good key points in what you said. One, you listened to the advice of somebody who knew more than you. You continually learned and had a passion to learn, right?
Yep.
You invested in yourself. I'm sure those classes, InvestTools, and that seminar, I'm sure that stuff wasn't free.
It was not.
So you spent your money on yourself getting better instead of maybe something else. I mean, I know you used to have a really big, large Jordan collection, so I can't say you used to buy that instead of Jordans, but maybe you would have bought 2 pair and you just bought 1 and you still invested in yourself. But the most important thing, I think, is that you acted upon, in each one of those steps, you acted upon what you learned. So I want to thank everyone for being here, because if you're listening to us right now, that's the first key step in any of this. I teach financial security, financial, intelligence, and Wallace is here specifically talking about stocks, but being here is the most important step. You learn something from someone who knows more than you, and then you can take it, you can act on it, instead of just kind of being in the same old pattern. And that's kind of the essence of your story. That guy gave you advice, you took it. Your friend told you about InvestTools, you did it. You saw the seminars, you went. And now you're here, able to even give advice to other people about what you're able to accomplish in the stock market.
Yes, sir. And you're exactly right. And I would recommend everyone do that, right? And as we go on, we may talk about it. When people that know more than you, listen. Nothing's wrong with listening, and then after listening, act on it, right? Because a lot of people don't act, and when you don't act, you may miss a glorious opportunity. Back in 2020, when everything went down, people weren't acting on buying stocks. Next thing you know, the stock market goes up, right? And then now 2022, now 2023 now, we are in one of the worst markets that we've had since 2008. This is the time to act. So when you see people are telling you that no more, act on it, because people are telling you the truth.
Well, and I think it's important to realize that when the stock market is down, but you're not really in, like most people right now might be listening like, when's a good time to get started with stocks? Actually, when it's down, because everything is on sale. The upside is there, right? So if you get in now while it's down, when the market starts to go back up, you'll ride the wave back up. It's really hard to buy stock when it's really at a high price, because then it only moves a couple of dollars from where you don't really make a profit. So if there's a stock that's, Apple is on the rise, Amazon is on the rise, Tesla's on the rise, and you go buy those like while they're on the rise, you might catch it almost at the tail end. It might have been rising, for the last 3 months. You hop in and you catch the last 2 weeks, and you paid, $200, dollars for a stock that only goes up $3, right? But right now, let's say it's gone down to like a record low and it's $98, but like Wallace will teach sometimes, it's about something that had nothing to do with the way the company was doing its business. Maybe it got like a little bad news report, or maybe like, one of Tesla's cars like swerved in the street with the self-driving. So people are a little bit worried. Or right now they're saying recession, recession, recession. So people are getting worried. That has nothing to do with the company doing bad. So if the stock market is going down because people are pulling their money out because it's a supposed recession, it's a sale, really. You can go in now and buy it, and then when everyone in the economy starts getting more relaxed and, the debt ceiling is passed and the government and the stock market goes because all the investors got comfortable, that's where you'll make your money.
Boom. Boom.
All right, so let me ask you this. What's the most common misconception you think people have about investing in stocks?
All right, let's see. All right, first off, I'll say this, and I say it in my class. Tips are for waiters, right? Misconception. If someone tells you I have a stock tip, you need to run as fast away from that person as possible. Unless that person invests in some type of hedge fund or some head of a hedge fund, they don't know what they're talking about. I almost promise you, almost 9 times out of 10. So tips are for waiters. When someone tells you they have a stock tip, say, hey, you know what, get into it. Get them to tell you what it is. You go home and you do your homework. So that's my next thing. Buy and hold. That's one of the worst things you can do. And nothing's wrong with holding stocks for 5, 10, 20 years. But we want to buy and do homework, because what happens is, let's say, for instance, you bought Circuit City, back in the day, or Research in Motion, who had BlackBerry back in the day, and you have the rival Apple coming up, and Research in Motion was doing well, and you holding and not doing homework, not realizing that Research in Motion or Circuit City is not keeping up with the technology of the times or whatever it is, and you have a rival company like Apple or Best Buy that is taking market share from this company. So you want to buy and do homework. Buying and holding is one of the worst things you can do, because something may come out, like you said a little while ago, may come out that, hey, guess what, the CEO is retiring. Why is it retiring? For family purposes. Maybe there was some type of unfortunate thing that's happening, in the company with, harassment or whatever it is. And they're not going to make margin, or they're not going to make revenue. They're not going to make certain things. You want to keep looking into your company because of beyond me. Yeah, so someone put beyond me. You want to keep looking to the company because the company's not making money and it's not keeping up with the times. Guess what? That hole will be in the hole in about 4 or 5 years. So buy and hold is one of the things that I want to tell people. Nothing's wrong with buying and holding, but you need to buy and homework. Buy and do homework. Continuously see what's going on with the company. Continuously look at the company and see if they're growing, if they're keeping up with the growth rate, and that's going to allow you to make decisions. Because the reason why you got in the company back now, let's say 2020, and that thesis has changed in 2023, you need to change with it.
I think you make a good point. Like you said, one, tips is for waiters. That I think that that's people just waiting to hit a lick. Like this is not the lottery. This is not the jackpot. You can strategically hit a jackpot in the market by, like you said, buying and doing your homework, right? You do your homework. You look at the company. You make sure it's solid. You see where the potential is headed. You see the news, new products they're working on, things they're developing. And now that's how you make a move. You don't just listen to somebody, because half the time when someone's telling you, hey, man, I heard about this, right? When they do that, they're trying to get you to do it with them so they can feel like it's a good idea, because they probably just heard it from somebody else too. Like if you listen to Wallace's story, 2 completely different things happen. The guy in the parking lot didn't say, hey, man, I heard about this stock. He said, hey, young employee, you should get invested in the stock plan of the company we work for. Because it's so good, it's hired both of us, and it's got a solid customer base of home improvement, a thing that's never going to go out of business. You should invest in that. That's completely different than, hey, man, have you heard about so-and-so company? Man, you need to buy that. They about to blow up. That's not stock advice. That's that, if they can't show you the data behind that, they can't open up their stock app, show you the balance sheet, show you the profit and loss, go and show you why they believe that, then do not believe them. That's a really good common misconception is that you can just take random stock advice and pray. It doesn't work like that.
And another misconception I want to say real quick. So at the time, I told you the story about my sister with Walmart. Walmart was sitting at about $138 a share. It was cheaper than Costco, who was at about $279 at the time, or two somethings. And don't look at the stock price thinking that it's cheap, because Wall Street fools you, and you can see that the stock price is cheaper than its competitor. But when you dig underneath the hood, you look at PE ratios, you look at growth rates and stuff like that, it's not growing as fast as the stock that is quote unquote expensive. Now, Costco went from wherever it was to double its size. Walmart went up $10 in a period of 2 years. Costco goes up, almost 3 times the size of the stock price. So don't look at the stock price thinking, hey, it's cheaper, because that's a facade. Once you go underneath the hood, you'll see if it's cheap or not.
I agree with you. I think also a common misconception I want to add is that this is too complicated. That's a
True.
very big misconception. It may be complicated, but it's not too complicated for you to understand what to do. And once you kind of understand the things that go into evaluating a stock, you can do it as easily as you drive a car. You might not, but the car has a gear, it has steering, it has the lights, it has the engine, it has a bunch of components that you do not understand. You couldn't take it apart and rebuild it, but you know how to drive it and successfully get to your destination. Kind of the same thing. There's only a few things you need to understand how to operate, a few other things you need to be aware of that you could pay attention to. Like in your car, you want to make sure that you change the oil, you want to make sure you keep your fluids good, you want to make sure your tire pressure is good, but you don't have to pay attention to that every single time you get in the car. You just need to make sure they're good. Same thing with a stock. There's a few things you pay attention to consistently, and then there's a few things you need to be able to do to operate and move to your destination. But you can be successful with that same level of ease once you have guidance and understanding.
Yep. And I tell all the time, it's not easy, but it's not hard.
Mm-hmm. Yeah, this is not too difficult for you, and you being here demonstrates that. All right, so let's say, let me ask you this about your method, right? So, do you trade every day? What do you trade each day, and what's your routine for success?
All right, so now I've gotten into day trading, so I do trade most days. But before then, I would trade probably 3-4 times a month, maybe twice a month. Depends on the setups. So my routine, say for instance, well, we get to this. My routine is I get up early in the morning and I go through. Let's say the first thing I do is the economic calendar. So I see what's going on, because we have some economic news right now. Things are so crazy from an economic front. When the Fed speaks, jobless claims comes out, CPI numbers come out, PPI numbers comes out. It's going to move the market big time, right? It's just the nature of the market that we're in now. So I look at the economic data, see who is talking and when, because that's going to move the market. Second, I look at what we call an oscillator. So that's an oscillator that my team and I look at, and it tells us if the market is oversold or overbought. And it's not 100% right, nothing is, but it gives us the opportunity to see if there is a pullback coming or a bounce happening. So if we're, say for instance, oscillator, anything over zero is considered overbought. Anything under zero is oversold. So when it's an oversold level, we're looking for a bounce soon. So I look at the oscillator, and then I will go down to the overall markets, SPY, the Qs, the Dow Jones. I look at the VIX. So I'm trying to see the direction of the market, if I'm going to follow the trend and or play a rejection or a bounce. So from there, I go down my list, and a list of stocks. It's a whole bunch of them. Not that many, but a good amount. And I try to find really good setups. So say for instance, you have to be patient with this. If the setup is not 100%, I will wait. Right, I will wait either on a rejection point or a bounce point before I get in. As far as, because I do options most of it. So I go through that. And then after that, I pick the direction, and then I pick the stock. And so we go 30 days out, or 60 to 90 days out, or longer, maybe long term. You know, we call those leaps. So mostly I do 30 days because we use what we call Greeks to our advantage. You know, if we're going to sell or buy options, you know, to our advantage. So there's some strategies that a lot of people don't know that you can make money if the stock go up, down, or sideways. You know, so we use those strategies all the time. So I do that, and I stick to my plan. Whatever my plan is, I will stick to that. Because a lot of times when I don't do well in the stock market or don't do well on the stock, I deviated from a plan that I had, right? So I'm telling you, make your plan, stick to it. Sometimes you have to be more patient than normal, right? Sometimes you have to be. And when that happens, you know, you're going to see 2, 3, 4 times your money when you stick to your plan. A lot of times when you deviate from your plan, the market will humble you real fast because we're trying to chase something that we missed or whatever, you know. So just stick to your plan.
So that was a good amount of detail right there. That was very detail rich. Is there a way that people can connect with you to kind of learn that method, learn that routine, and kind of have some of that broken down even deeper?
So I have websites. Well, my website is being modified right now, but you can look at me, DM me, Wall Street with Wallace on Facebook and or Instagram. So I'm on both. I'm getting ready to start using TikTok. Kind of leery about that, but I'm getting ready to start using that. But you can DM me. I have a page, a private page on Facebook. I have also a Wall Street with Wallace page on Facebook as well. So get there, ask me any questions. If you know me, I will answer those questions.
I've seen the success of a lot of your students too. I know a lot of people that hadn't done anything with the stock market, and then they started working with you and started seeing actual real returns and profits, just from going from being a rookie to being able to just follow, because you have a very good hands-on approach, I think, that makes it easier for a person to not feel so lost or feel like they're just kind of, you know, out there all alone. And it's easy to get in contact with you. I think that's great.
Yeah.
So with that being said, how does a person get started that's listening to us right now who's like maybe just working their job? How can they like get started? Like what step can they take to actually begin this process? And I kind of want you to touch on the paper trading as well as how they can actually maybe start trading. So if they have to start with the paper trading before they accumulate enough to start, and then if you can even talk about the ones that let you buy like a fraction of a piece, because I really want people to be able to kind of feel it.
Okay, awesome. All right, so working. The first thing I would tell you, I remember, it depends on who you are. Me, I'm a morning person. If you are an evening person, take advantage of that, right? So Eric Thomas, you know, talked about years ago, if you want to be into something, then only 24 hours in a day, right? Sometimes you got to wake up at, you know, 5 o'clock in the morning. Sometimes you got to wake up at 4 o'clock in the morning. Sometimes you got to wake up at 3 o'clock in the morning. So for me, morning time is my best time. So I started getting up at, I'm working, right? Started getting up at 6. Then I started getting up at 5. Then I started getting up at 4. You know, I started at 3. I pulled it back to 4, only because I was trying to get a routine in that I was studying the market before I went to work, when I went to lunch, and when I came home, right? You know, because now I'm always in the market. I'm trying to figure out how to either learn fundamentals or learn the charting to make a trade. Now, from there, you get a brokerage. You know, Robinhood is good to start. You know, once you get into it, I will say, you know, you can start to do other things, but Robinhood is good to start because it allows you to buy fractional shares. And that's a good thing because now you're in the market. You know, most people are not in the market because they don't know how to. So Robinhood is a really good starting place for most novice investors. But afterwards, I would say, you know, go to E-Trade, Thinkorswim. We use Thinkorswim, powered by TD Ameritrade. You can use those. But once you get that, TD Ameritrade and Thinkorswim gives you a paper trade account. You know, it's kind of fake money. And that's what I would recommend. And it gives you $100,000. You don't want to trade with $100,000 because you'd be frivolous with it. If you think you're going to have $2,000 to trade with, move it to $2,000. And then you start making trades, right? There's a student in my class. When we first started, never forget Chris. This dude was 100% every time. Like every time he made a trade, he was 100%. Either when he lost, he just put the trade in opposite, right? But that was the time for him to mess up. He was paper trading and making sure that he was getting his, you know, his way, right? You know, he was getting his routine. And I told him, I said, dude, you got talent, bro. And like all your trades are winners. You remember that? All your trades are winners. But when he was messing up, that was the time for him to mess up. Now, when he started to do things on his own, he has enough experience, and that gave him some confidence in order for him to get into it. Now, I would say this also: try not to stay too long in paper trading because you get attached to it, and when you do that, once you almost never come to your own money, right? Because when you got skin in the game, basically, it makes a whole lot of difference. And I was talking to a student that was paper trading; she was doing well, and we'll go over the account. She's up 40-50% one day and down 20% 2 or 3 days later because she wasn't watching the account. Guess what? When she started with her real money, she was watching those trades. she was watching those trades. So
And,
it gives you that.
like you said, sometimes you might want to take a different position. You can kind of take a real one, and then you can also kind of follow along what your opposite position would have been in paper trading.
Yep.
You can continue to practice. I think that's really good. So for everyone to remember, Robinhood is a good app to get started because you can buy fractions of shares. So if you actually want to say, I'm actually in the stock market, right? And you're starting to try, but you want to take kind of like a toe in the water approach instead of diving all in. Robinhood is a good way to get started. And then, like Wallace said, if you get a TD Ameritrade account, you're able to get paper trading, which is allowing you to practice to do trades. And then Wallace even specializes in teaching people how to practice before you get ready to dive into the market. So these two ways start to let you take that baby step, but it also kind of gets you off the fence of not doing anything, and it lets you do it with minimal risk, right? I think that's the most important thing. And if you want to take a baby step just besides that, just start with opening up your stock market app once a day each week, right? Get in the habit of carrying it, because for some people, it's not even a part of their world.
Right.
They look at the news and the stock market is going at the bottom, and I mean, like, that's the financial dealings of the world today. But because you're not feeling like that applies to you, or you feel like you're involved, then you don't pay attention to it. The more you pay attention to it, the more you start to recognize what the 3 letters, 2 letters mean per company. The more you go into your stock market apps, like, do me a favor, go on your stock market app, pick like 3 stocks that you know, right? And you could type in the real name. So you could type in Walmart, you could type in Apple, and then you could type in something like Tesla, right? You'll put them in your favorites, and then just each day, just watch what happens to them. See if they go up, see if they go down. Say to yourself, what if I invested in this stock? What would be happening right now? And it gets you in the habit of actually looking at stocks, right? Understanding what they are. Then you can get you a Robinhood and put you a little bit of money in one of the ones that you've been watching. Then you can open your paper trading and begin to practice with the ones that you've been watching and caring about. And this kind of gets you on a path of getting used to and getting comfortable with the idea that this is something that you can do. This is something for you. Why should other people be able to invest in stocks and make money from it and be able to profit from something that's available to everybody, but simply because no one took the time to explain it to you, you have to be left out? I don't think that's fair. And so now, even if you have a stock app right there on your phone, you have your computer, like, take the next step past coming here to hear about it today and do something this week with the information that we're giving.
Agreed. I totally agree.
All right, let's see. So give me some good stocks for 2023.
All right. So this is a powerful question. And most, I say, professionals would avoid this question only because, we have no clue what the stock market is going to do, right? None. That's why it's always good to do your research. The right answer is I'm going to follow the market and take what the market gives me. So now what we have now, give you a more specific answer. All right. So what's going on in the world now, right? We have high inflation. We have high interest rates. We have, what we call a recession that's happening. We have the war in Ukraine. We still have lockdowns in China. Oh, that's not good news. So that is what we call headwinds for the market, right? So if that continues, high interest rate continues, technology won't do well, because in a high interest rate environment, normally tech stocks don't do well. But if I had to say maybe a really good time to get into some tech stock. Why? Because they're at cheap rates. So like an Apple, I'm going to always say, look at Apple. Apple's the biggest dog in the world, only because say every time someone is in the app store, if I got to pay you 30% commission for all the money I make, that's a big moat, right? So who is going to beat that ecosystem? If I got to, you're going to expose me to a lot of people, but I still got to pay you 30%, and people have to do it. Why? Because Apple will expose them. So I'll say, look at an Apple, Microsoft, look at NVIDIA, maybe AMD, the chip sectors, because with autonomous cars and stuff like that coming out, Facebook spending a lot of money. When I say Meta, spending a lot of money on the metaverse. Those are those chips, right? That goes into that space. Amazon, the price of where it is right now is almost not, it's almost not really good not to buy, right? So you should look at it. Hey, it's almost irresponsible not to look at Amazon and Tesla at almost $100 at one point. So look at those stocks. But again, those are technology stocks in a high interest rate environment. The Fed is talking about keeping interest rate high probably until first quarter, right? So we're looking at April. So you may see some up and down in those stocks, but those are at really good prices right now. And 2 years from now, when we don't have that issue, those stocks are going to, like I said earlier, boom, they're going to blow up. From a recessionary proof stocks, excuse me, we're looking at, let's say, look at an Eli Lilly. Those are healthcare, right? Eli Lilly, United Healthcare. And people always get sick. People, so those stocks don't need the economy to do well. So Eli Lilly or United Healthcare. Let's look at staples. When I say staples, we got consumer staples and we got consumer discretionary. Discretionary is what I want. Nike shoes, right? Jordans, or let's say Jordans, or any type of paraphernalia. What I need, like a Pepsi, right? So Pepsi company pay really good dividends. Coca-Cola pay almost 3% dividends. So those stocks do well in any economy, especially a recessionary economy, because it don't need the market to do well, because people are going to buy Coke, people are going to buy Pepsi. They just don't just sell Coke and Pepsi. They're big brands. On General Mills, it's a food company, right? We still need to eat. So they pay almost a 3% dividend as well, right? So that's a recessionary proof stock. General Mills, and it's something I like to look at. And we talked about Costco earlier. They don't pay a big dividend, but they do have a competitive advantage than most of their peers, because they charge a subscription fee, to come in, and people still need to buy in bulk. So if the recession gets worse, people are going to shop at a Costco more, because it helps out the family, saves them money. So look at those stocks. I would say stay away from stocks that don't make money. And when I'm talking about don't make money, when you do your homework, they have negative net income. They have a negative EPS. That means earnings. They earn at a negative rate. Now, in a good environment, they may do well, like a firm. Someone said Beyond Meat earlier, Peloton. But in environments like this, when interest rates are high, those stocks won't do well. So I would say stay away from those type of stocks. If all of those make sense.
Nice. You get some good ones. You get some good ones that kind of went through the different types of ways. Make sure y'all go back and y'all repeat that. Post this on the live, so that you can already kind of get an idea of what you want to be able to look at and start following. Those are some really, really good stocks. I kind of want to deviate for a second and ask you, man, what you think about the pop with this artificial intelligence, man? I've been seeing these robotics and this AI. Like, do you think we're at the beginning of where, if you got into companies that are doing that right now, you're going to really kind of be able to ride, man?
So the people that are on my page now, so I posted a couple of weeks ago about automation and artificial intelligence, right? So with the job market being the way it is, automation, AI is going to be booming. So yes, I do agree, that it's a space that even cybersecurity, those are spaces where the growth is almost endless right now. So yes, look into those types, AI, automation, because as much jobs are being lost, companies still have to be productive. So companies go to automation to be productive. Right. So look at some automation stocks. I've talked about healthcare, biotech. It gives you technology exposure, and gives you that growth as well. So AI automation, biotech, healthcare,
All right.
especially
Awesome.
environments like this, cybersecurity.
Let me ask you this. What's the difference between, and you ain't got to go too deep. I just kind of want people to understand that there's different ways to make money.
Okay.
So the difference between trading stocks and trading options.
Okay. All right. So let me say this. Stocks. Stocks, I talked about earlier, you can hold for a long time. Stocks is, you can pass down stocks to generation to generation to generation. You buy a great company, you know, not the BIMs of the world, not the, you know, what is it? We talked about earlier, Circuit City and Research Emotions, not those stocks. Some really good stocks. Those stocks last years, decades, generations. So they don't have expiration dates. You know, and it goes up one day by $1. Guess what? You make $1 on it. It goes down by $1, you lose $1. It goes up by $100, you make $100. Options, on the other hand, they have expiration dates. So options expire. So you have to get into options at a certain point if you think a direction is up or down. So you have to be pinpoint the direction that you're going to options, because you don't have long to do options. Now you can do leaps, a year, 2 years, down the road. So you do have the ability to have long-term options, but they still have an expiration date. And with options, you can make money faster, but there's something we call Greeks, right? So we got delta, theta, gamma, and rho. Those dictate whether or not the stock goes up or down at a certain rate and how much money you want to make. If you don't know the Greeks and you're buying options, you really are kind of gambling, because the stock can go in your direction because theta is high. You could be losing money. So the difference is you can make more money with options, but at the same time, options are a little tricky if you don't have the right know-how, the right teacher or the right mentor to trade options, because you can lose your money just as fast as you put it in with options.
You're the one that taught me how to do options, so I appreciate you. And like other people, you're the one that kind of broke down those things to us about how to trade options. Because at first I thought, I could only do long-term stocks. So you're saying trading stocks is a long-term plan, and trading options, you can do it for a long time, but you're making money faster in the short term. So it's kind of like you make your money right now, and then on the stock side, you buying the stock and you hold it for a long time and let them grow. So one's like a long-term strategy, one's a short-term strategy, but you can keep doing both.
Yeah.
I remember, I just seen this in the shot. I was understanding options. You know what I'm saying? Just getting a deeper understanding. Like, you can learn this stuff, and it's all beneficial, because at the end of the day, you're gonna, be able to turn a profit, and like you said, build long-term wealth. So much money you can change a generation, pass it down to your kids. But as long as you feel and stand on the sidelines and don't think that it's for you or something that you can do. If you feel nervous right now, you're supposed to.
Yeah.
You don't know what you're doing, but you keep coming to these lives. You connect with Wallace, connect with myself, and we'll be able to, over time, help you get to a point where you're comfortable. And then you'll look back on this time and you'll literally laugh, because you'll say, man, I remember when I first went to my first, you'll have a story like Wallace, but yours will start with, man, I remember when I first went to that live and heard that guy, Wall Street with Wallace, talking, and I became a student. And then from then on, I was able to do trades. I started paper trading, and now I have a portfolio, and people ask me about stocks. I tell my friends about stocks. I show other people how to invest. Like, your story can go like that, and it can go like that really quickly. You can be talking like that in 2025. It's really it's amazing how how that journey plays out.
Yep.
All right. Let me ask you this one last thing. I guess I kind of said it right here. Reading, connecting with you, but I want you to be able to kind of answer this last question.
Okay.
How does a person get better at understanding the stock market? So we're not doing this 24/7. We're doing this about once a week. How does a person, when they're not with us, even if they take your class, they still have to go do homework outside of that? How does a person get better at understanding the stock market?
Oh, wow. So I would say, first thing, get the right mentors. Wall Street with Wallace. DM me, someone posted, DM me, join my pages. I'm not going to sell you the get rich quick type of thing. I'm going to tell you the truth about stock market and options, about being methodical about making money in the stock market. Second, I would say one of the best things that anyone is trying to do, when you're trying to be better at something, you need like-minded people around you. So we have a community. We have a community with people that talk about stocks, talk about options, talk about different plays, right? So I say, for instance, a couple of weeks ago, we made money on Amazon going up, and there was some people that thought Amazon was going to go down. Guess what? They made money on Amazon going down. So we both had different directions. We got into it at different times, but at the same time, both sides made money. And I say that to say, even if someone don't agree with your direction on what you're saying, at least they're giving you a different view, and you're talking to someone else about it, right? And if I can't explain to you, you can't explain to your friend why you're getting ready to buy this option or investing into a stock within 30 seconds, you're really not doing your homework enough, So get around like-minded people, so you can continue to grow your mind and your routine and strengthen your confidence into the stock market. So a lot of people don't realize that, because if you're doing it yourself and you're the only person, not saying that you can't, because I had, and the same thing with you, we got that grind, we got that dog in you, but at the same time, when you're around like-minded people, it helps you grow a lot faster. So get the right mentors, DM me, join my pages, I'll make sure that I'll put you in the right direction, and then get in a community where you have like-minded people talking about it.
I like how you put that. And disagreement doesn't mean that you're not like-minded. You're both talking about stocks, even if I don't like the same stock. At least I'm talking to somebody about stocks. I want to add to that by saying, like, don't let people discourage you, right? Like, people only know you up until this point. So if you start talking about stocks, if you read me or Stay Broke, and you get my book and you start reading about real estate, you start reading about stocks, you start reading about a business, and you start to really know and understand how to raise your credit score, lower your debt, save some money, be able to look at the type of business entities, look at the stock market, and you start talking to people about this around you who've known you for a while, who are not moving forward as well, when they try to paint you as not capable of doing those things, they don't know what you know. They don't know the work you're putting in. They don't know that you came here today, you invested your time. So don't let them create your self-identity. Don't let them tell you where you can go. And don't let them discourage you and make you stay kind of stuck by, assuming that you can't do what you feel capable of, right? Believe in yourself, continue to learn, and your confidence will grow, because you'll get to a point where you feel like, man, I'm smarter than I knew I was. I'm able to comprehend this better than I thought I would be able to. And then just continue to repeat, like, rewatch this video, contact me at Wallace, absorb some of our content from our pages. You will get smarter, you will get more confident, and eventually you'll be more profitable. All right, my man, I'm grateful for you being here. We got to do this again. Thank you. I think we can do it again next week. I'll send out a flyer, let people be able to come back. And I think maybe we can even kind of go over the market that day, or maybe we can just get a little bit deeper just into options or something, so that people, just begin to expand their knowledge base, And
have people with some questions, so we can do some question and answers.
That's a very good point. Does anybody have any questions right now that's still on live with us? We'd love to answer any questions that. Man, this was good, man. I like how you got into the Greeks a little bit, and then talking about the knowledge and being. I always love your origin story. All right, well, this is like questions right now. We kind of probably broke it down really well. If you have any questions, you want to put them underneath the video. When you see it posted, we will come back and we will answer you. Thank you, everybody, for being here. Wallace, great time, my man.
Thank you.
All right, I'll see you next week.
Yes, sir. All right. Thanks, everyone, for joining.
Oh, hold on. What's the name of the book I held up? It's called Understanding Options. And I think it's by Michael Sincere.
There are several tax implications when you're dealing in stocks and options. Of course, losses and gains. DM me, I can give you a little bit more information on that. But there are some tax implications, and of course, and capital gains and losses.
But the good thing is they don't hit immediately. You
They
can
don't.
make your, you can talk to your CPA, or you could do your taxes and bring them in as income, and so you don't have to worry about like, oh, I made it right away. Like, oh, what's my taxes?
Yeah, you're right.
Yeah, just we can talk about it. Like once you make something, you can understand, or even before you make something, we can tell you how the taxes break down, so that when you accumulate income, you'll know.
Good question.
All right, everybody. Thank you for being here.
So we got?
Yep.
All right, cool.
Oh, we got. All right, my man.
All right. Thank you.
Yes, sir.